29/17 to February 3rd. Holy crap, it's February in a couple of days. So we got a lot of work and things to get into right away. Listen, today's topics. We're going to talk about some controversial stuff, but we're also going to talk about some things that need to be done here in Deck Signals and on the in the solution. And I appreciate everybody's patience. I appreciate if you have questions, please don't hesitate to ask, but make sure that you're asking them at the end. And we're going to have a questions and answers at the end with the process. All right. Also, a word to the wise, my dog is with me today, and she is notorious snorer. So please hold all chuckles to the end of the video here. And those that are watching this after the fact, thank you very much. That's what that noise is. Okay, so today's topics, the NA intraday. Now, this is the news avoidance intraday system that we started to implement. And this program has probably been one of the most challenging that I have, because it's in part for the first time with a secondary company that is not really participating with our development of this process using investing.com. When we had the Forex factory one, it has something that made our life very easy, and I'll discuss this in more detailed when we get to the next when we get to that slide. But I'm going to talk about the trials and tribulations of this, and when we're hoping to have it finished here. We're going to talk about the dailies, SR on the go. Now, the SR stands for support and resistance, so we'll talk about the dailies and some people's version of a choke up here that we've started to really take a notice on, and for myself, how important, how powerful these programs are. We're going to talk about the DEX SR Max. This is sort of a play on words, but listen, this new sorry, hang on one second. This new signal part of the process is a 2-hour signal that we're going to be working with. But I want you all to know, for the Deck Signals people, of it being for senior elites for right now, eventually it will become part of the signal network for Deck Signals. But I want to show you some things too when this thing comes out, and also let you know just of a few things that are pretty powerful in using this mentality. It takes a lot to compute how to get into the trade, but we kind of show an exit strategy here too on something that's pretty powerful that I wanted you guys to see. Also, talk about the non-farm payroll. Very short conversation because it's this coming Friday, so be prepared. This could be your day off. Who knows? It all really depends on what you want to be able to trade. And then I'll give you some final thoughts. All right, let's get started. We're really not going to talk about so much on the money side today, but again, everything that we talk about today is for your education and trade assistance only. Don't be risking the farm on anything that, if you're brand new, you should definitely be trading in demo, of course. And of course, if you see other traders in the trader room, or myself or anybody else posting videos, all results may vary. The news avoidance system is, like I said in the beginning, a very powerful solution, because it will help us avoid, of course, the news, as it says in the name. Come on, Max. But the real concept here is knowing how to feather in the power of that news, and for us to be able to track. Our system doesn't just track the news, okay? Our system also tracks the signals. And then it takes the news, okay, and it says, okay, when the news is 2 bulls, how did the signals do? When the news is 3 bulls, how did the signals do? And it starts to take that and turns it into our favorite word of the day, which is data. I'm getting my touchpad here in a day or so. So pretty soon, all that, you'll see my true handwriting, not just my finger pointing on a screen or my mouse work, okay? But once we have the signals attached to the news avoidance process, we now can start compiling this data. And that means that depending on what type of news releases, we can finite exactly how well the signals work. Now, this could be the daily, this could be an intraday, this could be the SR Max, it could be just about anything at that point. Because this news avoidance process will affect the way things work and how we deliver the signals. So the news avoidance system is probably one of the biggest, besides the actual signals, one of the biggest programs that I'm developing in order to be able to use this and feather the true, since we're a news avoidance company and traders, that this would be one of those things that we could just feather over our signals and really start to produce even better results, and knowing that this happens. Now, listen, in any trading process of using that, news, some news will affect the outcome of hours to come. Okay, so you have to keep that in mind. If you get an 8:30 block of time, okay, and you got one set of bulls, two, and then you got three bulls, and you got two bulls, and you got one, and then maybe some three bulls, and this is all within 8:30. You got to keep. Look at that. That's terrible. At 8:30, you got to keep that in mind. I don't even know what that is. I really don't even have a clue. Let's just say, I'm just going to say the words 8:30, right? So if it's like 8:30 and you have all this news happening, it's going to affect for 9 and possibly 10 o'clock. Why? Because the news maybe got pushed as soon as 8:30 happened. Maybe it was on its way up and then it dropped way down. And then 9:30, 10 o'clock, the news wants to come back up to try to right itself to get back into that direction again, right? Because that news is always sort of self-regulating. It always wants to come back to that process. Now, sometimes there is a part of the process that gets, that this may not happen, but don't, that's far and few between. All right, but this is just an average. So we have to kind of compile the data to find out, when there is this much news during this time, how well will it affect the trades from that point. So you always have to know, if you do get a large block of time, I would probably personally avoid these times right afterwards anyway. Okay, even if you are trading, even if we have the news avoidance process happening, you still probably want to avoid some of those times after the fact. If there's a lot of news, like if it's the NFP tomorrow, I wouldn't be trading. Or if it's the NFP anytime, you don't want to trade that NFP. But if you do get a large block at 8 to 8:30 to 9 o'clock, 10 o'clock, or you get any block during the day that has 4 or 5 big news things happening in it, avoid the next couple of hours. Okay. All right. So in the news feed itself from investing.com, there's always something in there. Let's go over and have a look. Here's everybody over in the chat room. Okay. You can see immediately, it's like this morning, there was a little bit of block of time in, I don't know, did I do that over? Yes, okay. There was a block of time at 8 o'clock and then 8:30, and then you had this big, huge time, and then 10 o'clock. So today was pretty much a wash all the way up into this time, right? But one of the things that we started to really start to notice, especially with investing.com, is that they had some, let me see if I can find them here. I think it was yesterday. You'll see some news blocks. Let me see if I can find some in here. You'll see some news blocks that don't have really anything to do with the actual market, the more of investing.com process. And I don't see any on here. It usually says CFTC or investing.com in front of it. It was those times that was really throwing us off on the network. And then, of course, being able to track the actual movement from forecasted to movement and the differences between them and how well does it affect the market, which direction it goes. There's all these things that we're putting into it. So we wanted you to know that we're looking at every aspect of news, not just shutting the service off when news is. I could just pay a monkey to do that, right? And just push a button when there's no news, when there's news, and then push it back when there is no news. I want to make this thing as automated as possible, as much as possible. So it's one of those things that we will build to that direction, but unfortunately we can't do it right now at this moment. The news avoidance system is going to get its first release, hopefully again, okay, because we sort of had to turn it off even though it has the button on there. Hopefully by tomorrow morning, I can have everything. It's testing fine right now on my production computer, but I don't want to turn it on to live until I absolutely know it's going to stay. I don't want any more people going to it and saying, I used that and it failed. And I just want people to know I won't even show it until it's ready for customer production. And then again, even then, it's still in a beta capacity. So I won't put it on as alpha. It will be still in a beta capacity. And we will release that information as such. Okay. All right. I want to talk about something right now that's a lot of newcomers and a lot of people that are first getting here to the website, going through the training, trying to figure stuff out, knowing about choke ups. Hey, I can't get into trades because there's not a fill rate available and it's only filling 20% of the time, but not in my session that I'm dealing with. And you get a lot of people who we understand things hit you. We're not your normal signal network, right? We're not your normal training network, or Christ, we're not even your normal company, all right? The way we act and the way we portray ourselves and our sincerity and our honesty and our transparency. But we also know that you cannot be the standard customer, or you will always be a customer. If you want to be an investor into this, you have to be acceptable and understanding and responsible and, of course, respectful for the entire process. All right. Respectful during the entire process. That means when shit doesn't go your way, you don't throw a tantrum over it. Trust me, it is very difficult in this industry to get where you need to get to unless you put the hard work into it. And that's what I've done. I've worked very hard at being always forward moving. Okay. No matter what's thrown at us, we're always moving forward. So we know that if we find a new way to do something, it's being used and thought of and produced. It is really about taking the information that we've learned from our past and applying it to the present for our future. So keep that in mind. What I'm about to show you is not a 100% proven exact, this is what you're going to do and you're going to make $1 million process. You need to apply it to your own abilities. Okay. What it works for me works in a short-term process, may not work in somebody else's long-term view. So for me, what I do is that I use a handful of things to really look at the market and to really figure out, is this pair the best pair to be able to get into? So let me show you what I'm talking about. First off, let's get over and have a look at the signals themselves on DEX Trader here. We'll just use it. The DEX Trader signals are the same as the DEX signals because it comes from them. Okay, and we're going to talk about the dailies here, right? And we already know that the dailies are set in a range of the process that we know that it's a pretty high range, between 40 to 60 pip difference when it comes out. And we know, and some of us know why that is. And for those that don't, make sure you just go through the training again and have a look at some of the drawings in there that we do with the process, why they're considered a range. So when we get a signal that comes out, let's just choose one. Now I'm doing this live, so and I want to show you that this is for the 11 o'clock, and of course we'll probably in a couple of minutes hear a chime go off for the signals themselves. In fact, let me do that right now. Let me turn the sign off so it doesn't blast in my ears. But I want to take one of the previous signals here, and I want to show you something. Well, let's just use a popular pair. Oh, where'd you go? The 11 o'clock. No Euro USD was in there. So let's use an Audi USD on the buy, right? We know that it was on the buy. And I'm going to go to one of my charts here. And this is the Euro USD. So let me drag over the Audi USD here and kind of look, right? Now, what I have on here is simple. It's my support to DEX support and resistance from DEX indicators. And why I'm showing you with this is because this is absolutely free over on the website. Absolutely free over on the website of dexindicators.net. So you can actually just sign up as a free member and have access to this particular powerful, very powerful system. Why did I do that? Because I know that in order for most of you that are going to be using this next process that I'm going to show you, you're going to need, I don't want to be, listen, we could have upcharged for all this stuff, and we didn't want to do that. I want to be able to offer those people that are learning, there's people out there that just trade, what we call price action. And support and resistance is really about price action trading, right? Being able to see what becomes a valued line, right? What becomes a powerful line? Look, it touches there, touches here, sort of got annihilated here, but it always seems to kind of riddle right back in that area. There's another couple bounces in that area, that kind of stuff. So being able to see this in a macro look as you kind of dial back is how powerful is one of the SR levels and how well this system works. If you see a red line on my screen, it means that it's a trusted, valued level, but how far back does it go? We're not sure, right? So as we sit here now, we know that this AUD USD has a couple of good support levels, right? And we know the difference between a support and resistance level. When it comes up and the price is under a line, the line is then what we call a resistance level because it can resist that higher level. And when it is below a line, when the price is above, when the price is above a line, it is called the support level because it's going to come down and bounce off it and create support, or it's going to push through it. Now, a couple of tricks about SRs. One, most of the time, when it pushes through a heavy SR that has been rejected a few times or supported a few times, the price sometimes wants to come back to that within a handful of bars, right? So whatever time frame you're on, 1 minute, 5 minute, 15 minute, doesn't matter. It always seems that once it pushes past a really strong SR level, that it wants to come back. Here's an example right here. Okay. Boom, pushes through, closes above, right, which means it pierced it, and then it came all the way back down. It's like, I need to be here, and it rejected it, and it pushed it off even further, right? Here's another one. Pushes through, but then doesn't close, tests it, so this rejected it, and then it pushed through, broke it, and then it's like a handful of bars, like, nope, got to come back, and it came back through, right? At one time or another, it may continue to go on, but at one time, it's going to try to come back and touch that level. Why does this happen? This happens because they're trying to meet these demand levels. These are psychological levels at whatever level it is. And you can kind of see how everything's sort of still bouncing around in here, right? So the power of an SR level is on how many times it touches it, how many times. Remember, it's not just about a line, okay? It's about a range. And it's usually a very, not a strict range, but you can have something like between there and right in there that, let me see if I can redo that one. Just like that. So you usually have a couple pips up and a couple pips down where that line is. So it's usually the center line of a range, okay? But we can see that this one's pretty tight. Look how tight it is, You can see how very powerful, especially on the AUD USD. If you get the support and resistance system and have a look at this, you're going to see these margins. You're going to see these marks in there. And that's pretty powerful. I'm going to jump back over and see something real quick. Good. Whew, I'm glad that you could see the whole process there. Let me show you a couple more things here. Let me get back over to Dex Trader, see if anything. Okay, so look at this. Watch this, ready? These are actual live. Okay, they didn't ding off because I had my sound off. But I want to show you like the British Gold Pound JPY. Let me show you this one, which is set for 143.40. Remember that, right? 143.40. And we know that there's not going to be something available. It's going to be pretty far out, right? So I'm going to show you this, what it looks like right now on the British Gold Pound JPY. Where'd you go? There it is. There we go. Let me get you back all the way to the right. And here we go. What did we say the price was? It was 143.40. And see how far, look, that's sweet. Yeah, there's been a lot of movement since then. British Gold Pound JPY, right. Okay. But even though that we're all the way up right around here, we're quite a bit from where it's been, because there's a tremendous amount of news that was happening over this time, and the signal was diverted into seeing that it was a major down, right? So of course it was, right? Because there's a tremendous amount of news happening. So what happens when this happens, when there's a tremendous amount of news that's happened on the daily, and you're like, well, I can't get into the British Gold Pound JPY because it doesn't have a price available, and it's probably not going to come bouncing back up. Well, that's okay, because here's what you do. Simply take a macro look, okay? Get it to where you can kind of see a couple weeks worth of, not even weeks, a couple of days. Back it out even further, see where the market is right now. Start looking, and look at this. This is pretty incredible, right? You see how powerful this one line is. I don't know if you guys can see this line. You're going to have to investigate this process for yourself. But then look at the one that's just above right here. Look how far this goes back and boom, touches right there. Boom, 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 touches, rejects it, rejects it, rejects it, rejects it. You know, pierces through, goes up, and then and look what happens. Now, of course, not in a handful of bars, of course, okay, because it sort of decided that it just wanted to keep going, but it came back originally and then kept on doing its dance thing, right? Where it made this new SR level here because it was pretty powerful that it rejected. So this range of 8 to 10 pips right in this area was very powerful, right? Even this one right here. So we know now that this SR level at 142, okay? Because remember, the dailies happen on the 20s, right? So 0, 0, 20, 40, 60, 80, 0, 0, right? And on the JPY. So even on the any of the other ones as well, it's the last 2 digits of the pip. So just keep that in mind. So when this happens, could you go to Nadex and go to 14200 on the British Gold Pound JPY? Let's see. British Gold down JPY. We're looking for. Let me refresh this down here. If that ever happens to you where you don't see the actual pair available, you just have to refresh in here because I haven't been in here for a little while. So we're looking for what, the 3 p.m., right? The 3 p.m., that's what we're looking for the daily. And we're looking for 142. Well, unfortunately, since with all the news happening right at the moment, Nadex doesn't have something available, right? But because we could be bouncing up, could you put in, here's 142.20, right? Let's go have a look at that. Where's 142.20? Here's the 142, and then you come up to 142.20, you're all the way up here. Is that a possibility that it could bounce off of this area and start coming back up? The answer is yes, it could, right? So at this point, couldn't you simply just say, I want to put a working order on? And make it good, right? Make it a good working order. If you're going to do a low like this, make it good working. Get 25 bucks from it, right? After fees, 23 bucks. Yeah, make it what you want at that point. Now, this becomes a signifier of direction. And then with just a little knowledge that I gave you right there, a powerful model to say, I now know the range and know the availability of direction, okay? And if this becomes, remember, if it's above the line is support. If it's below the line is resistance. So now, if this blue line right here becomes a powerful resistance, if it interjects and comes back this way, can it come back up and hit your margins and break your margins, keep going? The answer is yes, of course, because that's the market. You're in a risk. But what you need to know is that can you get in even in a better price? If this price is now at 141.80, well, we already seen that we can't get into a price because because the market moves so fast while these British Gold Pound JPYs are being calculated. That's probably why you won't be able to get, this won't fill. Or if it does fill, it'll fill very late in the game, maybe in the last half hour, 45 minutes. All right, let's look at another one. Looks like, okay, so the Euro JPY, let's look at that, 122. Let's look at that. Let's look at that one. Hang on one second. Euro JPY, there we are. I'm going to drag this over. Okay, so here we are again. We're on a macro look. We're pulling back. This whole range area is really, that one particular huge line there. If we dive in here, we could see that it's ranged and just made this sloppy all morning. They've been battling, right? We know that the blues and reds are at war, right? The bulls and bears are always at war. And that's very important for you to know. So when there's a lot of carnage happening like this, is there a good avoidance process? So let's pull back just and have a look. And you see this big, giant, vast of an area, right, of about 40 pips that's happening in this area. But you also see back that this is a pretty good, support zone for when the price gets down to that. Could this thing be traveling to that section? And the answer is yes, it could be. And that makes this side up here a very good position to sell from the sell side. So, but again, 121.60 is about 16 pips from where we're at. So 121, because even that it's on a sell, right? So 121.60. Let's go over to a Euro British pound or Euro JPY. Go to the 3 p.m. And again, 121.60. There it is. Look at this. Okay. So there is a potential right here to grab that as an active trade, right? But is this high risk? And the answer is, of course it is. Of course it is high risk. Not super high risk, but high enough risk that you know that this 16 pips from there to there, okay, it's sitting at 121.53, and we came down to go to 60, right? If we went up, we could have went up to 80, but we would have been still way out of that money. So if you choke up at that point and hit 60, you know you're kind of playing that high risk now, right? You're coming down off of this break, right? And you don't really know where this market's going right at the moment until you start adding other things to it, right? So if you take this trade and you're at 36 bucks in the trade, you're going to have to watch this thing, right? And this is going to lead me into the second portion of this momentum here, is knowing when can I get out of this process? When is the best time to get out? How much money should I make on this? You know, because it's sitting at 36 bucks. You know, what would you normally make if you did a regular trade? 20, 23 bucks, right in that area. So if this thing starts to really move on and you get, you know, if it really starts to do well, if it starts to drop really well and you get 20, 25 bucks in it, because you could, right? Because it normally won't go over 70% of the profit margin you have on it, right? So if you do get that 20, could you scalp out? And of course, the answer would be yes. Anytime I'm going to make 23 bucks for the trade, I'm looking to get out. So if I get something that's a little higher risk, has a little bit more money on it, I'm looking to pop out at that point, right? Does that make sense? But remember, if you cut your profits, know how to cut your losses as well, right? So if certain things happen and this thing doesn't start to look good or what have you, like I'm about to show you, when do you cut your losses? And that's a big question, right? Yeah, we could have done a buy on that particular one, but there was no, let me show you again. There's no direct correlation with another support line. It's in there that's not in there for a long time, right? And I don't like not seeing another support area for a long time and doing a buy. I could have came down to 121.25 in this area, 121.20. Let me see if that's even available on 121.20. And I could have just did this and did 1 and did 75 and do that kind of process. That way, if it drops down at that point, it could pick up that solution for later. But again, all this information comes from right here, right? Because we know that the dailies are a range, and that range is specific to the pair, okay? For some, it's 40 pips, for some it's 60, depending on news. It might be even more from that time, okay? All right, at this time in the room, does anybody have a question on the SR level and knowing that solution? I'm going to be doing more training videos on the support and resistance and how to use it with that. And yes, this is being recorded. All right. So we now have a thought of a process that we're using with the dailies. We now can look at what works as a choke, what works as a push, because usually if you used it all, if you use the choke process, right? If we went over to Dex Trader and we said, all right, Euro JPY on the sell at 122, and we made a sorting of, you know, the Euro JPY on the sell, and we see 111, 75, 42, 37, nothing under 20 pips. So we know we can come down at least 20, right? But we came down 40, right? So what does 40 look like? Well, there's one broken, two broken, so 3. So, and there's 1, 2, 3, 4, 5, 6, 7, 8. So right around 20, so 76% chance that it could succeed. 70-something percent. So that's still pretty good at that point. But I would sit and watch this thing like a hawk, at that point because it's fluctuating at the moment, right? Got about 2 hours, so there's not a lot of premium being developed in there just yet. So there's opportunity. You sit and watch this thing unfold. And if it starts to go against you, how do you get out? What do you do? Right? All right. So we're using the support and resistance mentality with the daily signal. What could you add to the process to kind of make it a little bit better for you? And that's what we want to talk about next is the DEX SR Max process. And some of the things that there's a lot that's going into. Remember, I made this company and we have built it together because I needed something to take away from me technically trading. So even though that I can technically trade, okay, with technical indicators and tools, I want to make it to where my system, I don't want to call it a bot, okay, but my system does all that thinking for me, right? And just spits out my signal and then I go do what I got to go do, right? And then I can add minimalistic tools to this process, right? It's like making a building, right? If I want to make a framed out wall, right? I have a couple of choices that I can do, right? I can grab the pre-made lumber from the hardware store to make the wall, or I can go to the woods and cut it all down myself and make them myself, right? So I can cut all the wood down and do it myself, plane it all out and do all that, or I can go to the store and get it. And that's basically what I did is I made a giant pre-manufactured lumbering company that does it all by itself and automatically that spits out the lumber that gives me the main work done already. And that's the signal side, right? And that's what I really needed for it to do. So I'm going to show you a part of the process that is not about entering into trades, but exiting the trades. And what do you need to exit a trade? And we need one very important thing. We need an event to happen. Now, this event is not necessarily what you think. It's not about just news or a process or, Sheryl Crow just got a Grammy or whatever, or, Donald Trump says hello to everybody and now they hate the word hello. It doesn't matter what it is. What matters is that the event is broadcasted in a process, in an indicator or what have you. All right. And I'm going to show you what that is right now. Now, you can find now in some of our indicators, I've added some presets to indicators on DEX indicators, and the DEX MACD is a nice little powerful one to use. And I want to show you how you're going to use that in exiting trades, not even just in the SR Max that we're going to give you, but basically in just in anything that we have. If you get into a short-term trade, I want to be able to show you how to get out with an event happening that's very powerful. And this is called a crossover. Now, in all signals or in all indicators that use multiple lines or volume or anything else, there is always an event signature that happens with all of them. So this does not mean that every event signature that happens like in a stochastic or in an EMA or in a Bollinger Band or in multiple Bollinger Bands and all that stuff works. I'm telling you what works for this particular one because I've tested it and I use it, and I'll show you, right? Now, let me give you the tour here. If I go to DEX Trader, I come up here and I go to performance and I come here, you're going to be able to see, I'm going to open this in a new window. You're going to be able to see this is a page. This is my trading that I do. These are actual trades that are being done. Now, of course, this is demo. Let's be real, right? I say it right up here. It's demo. I'm not an idiot. I'm not going to be testing out systems with my live account, okay? I don't care how rich you are. I don't care how much money you got in the bank. If you test out live, you're being an idiot, right? Because you're just wasting money. You don't know how it's going to turn out, and you might as well go and put it all on black at the casino, right? All right. So I want you to see this. We started this out last week on the 25th, and we sort of went flat out and just started really making it work. This is not a lot of trades for an entire company, but it is a good amount of trades for an individual to go from the 25th to the 30th and make $639 trading one contract at a time. Okay. Now, you'll see that there is a green minus here. Now, why did I do that? And this is what we call an exit trade, or an exit or a scalp, if you will. Remember what I said, if you're going to scalp, scalp for the positive. If you're going to scalp, okay, if you get to your number, 22, 23 bucks, or scalp for the negative, but be able to do both sides. And I'm going to show you what I had to do here to make that happen. Now, why didn't I count it as a loss? I don't count a scalp for the win if I scalp out for less than what my profit margin is. Okay. If I scalp out for less than my profit margin, I don't count as a win. I count it. You would almost say that this looks like a tie, right? But it's not. I'm going to count it as a scalp. And if the scalp was positive or negative, makes no difference. Makes no difference in my book because it was a scalp. I'm showing you what the win-loss ratio is with the availability of how many times you're going to have to scalp. So you'll see this third number in here all the time. This is how many scalps were there. Okay. Now I'm leaving it green because this is not a negative connotation to me. You know, I don't make it orange. I definitely don't make it red, but I maybe even have to do a neutral color, maybe something like blue or something, right? Maybe that's what I need to do. Turn it to blue. Let's see here. Blue. No, that's a crazy color. What if I do a lighter orange? A not so hurdy orange, right? Okay, there you go. So I'll make it that color orange, like a skin tone kind of stuff. All right, but you'll be able to see immediately that, you know, the minus is what's really the negative connotation there is the minus. So the reason why that this happened was because we were able to get into this machine spit out the information of me being able to get in for this level, right? And then I got because I was watching the chart at the time, and for my chart, I'm going to show you what it looks like here in just a second. I did this process. I got out, and I'll show you how I did that here just now. All right, so let me drag over the USDJPY, flip it over. Okay, I'm going to add in my template. Okay, you're going to see this process. Now, this is the DEX MACD. Okay, it's got a little bit more than a standard MACD. Okay, but I want you to know that the premise is not really super the same. So be careful using just any MACD to do this. You can use the one that is on this on the website as well. That's for the web-based on DEX Trader, but still keep in mind it doesn't have the same feel as this one. So if you want to use hours, that's fine. If you want to use the one that's on there, you can use a version of any MACD in there, but keep the numbers the same: 12, 26, 9. Very easy to do. Okay. Now, what we're looking for, okay, is I got to find that timeline that I was on. That trade happened on the 29th at 2 o'clock or 2200 or 2245, and I got out at 2245 and got out at 2355. So you see about an hour later. So I'm going to go back to USDJPY. There it is. Okay. So basically, I'm going to put a line down so you can see here. So basically, I got in at let's see, 2300, 2340, right about there. Okay, I got in for that process, and you can see that I got in as a sell, right? And I got in at the sell, and it gave me a good line to kind of bounce off of. I'm up around in this area, okay? But my expiry is all the way over in this area, right? So what happened as everything was sort of indicating for whatever, you know, we had a long period of time, and the bot came out and said, or the machine came out and said, all right, you have to sell. Then something happened. Remember, we're always looking for an event to happen. And that's this event that's right here. I don't know if you guys can see that. You see that cross that's happening right there? Okay, where the blue line crosses over the red line. Okay, and you don't even need to know what all this stuff is in here. You just need to know that the blue line crosses the red line. That equates an event. Remember, simplistic value, right? And in this particular one, when that blue line crossed the red line, now sometimes you might get a false crossover. A crossover doesn't happen until an actual bar closes on that time frame. So you can see at the close of this bar, if I just go right in the middle of it, it probably wasn't there. This bar here is when it closes, and if you go all the way to the right-hand side of that, you're going to emulate the close time frame of that bar, right? So right around there, and you can kind of see it's a very distinctive close on the up, right? So this blue line is traveling up at that particular bar, right at the end of that bar. Now, once this bar gave me the signal, even though that I was in here and in for a sell, I was able to get out here only about an hour later. You can see it's about an hour later, right? I was able to get out, and I was able to get out for a minus $27 loss. That's a savings of 50 something bucks, 49 something dollars, 48 bucks, whatever it is, right? I was able to save. But also, really, the very next trade got me 3/4, even more, 80%, 90% of my money back in the very next trade. And then, of course, I was back in profit one trade later. Whereas if I would have been it the other way, I would have had to make 3 trades to get 1 trade back. You see? So I just saved my ass 50% more work being able to see the market and way it's failing at that particular point. Now, this does not mean that you could just sit around and work on crossovers, and every crossover is in equal denomination to go back the other way, and you should go from that point. No, do not attempt to do that. Do not attempt. Let me see. Did I just want to make sure I didn't click off? Okay. Do not attempt to follow MACD around on the crossover, right? You will be vastly disappointed. You'll get things in like this and then this, and then you'll get into things like this nonsense that happens in here, right? So the crossovers, when they happen, when our signal comes out for our SR max, are usually very prominent when they happen, right? So see something like this, we probably wouldn't have been in the signal for it now. It would have been for a sell. By the way, the crossover has to happen in the opposite direction of the trade you're in, right? Does that make sense? I want people in the room to tell me, does that make sense to you that the crossover has to happen in the opposite direction of the trade for you to say to get out? If a crossover happens in the direction of your trade, jump up and down and say thank you very much, okay? But for you, if it's in the opposite direction for you, if you're in a trade and you get that crossover and you're on that MACD, and this is why I'm going to go to the website, right? I'm going to go to the website, and I'm going to do you all a huge favor, is that the stochastic is great. I love the stochastic, right? It's one of my favorite things to use in double stow for entry and exit. I'm going to get rid of it. I'm going to do you a big favor, and I'm going to put on here a MACD for you automatically. So it pops up automatically on every single one of these on here, okay? So you can use it as a time period of when the hell to get out of a trade if it goes sour, right? Let me see if I can find USDJPY. Let me see if that one will actually depict what was happening last night. Now, it's going to take me a couple of hours to be able to do that, but I'll make sure I get it done today, okay? And here's that time from last night, right? That crossover right there, it gets validated right there, and we say get out because we were in for a sell, right? Because we got in over here. We got in here at 22. What did we get in? 22 something, right? I think this time is set down USD 5. Yep, okay, right? So as soon as that validated, we were off to the races, right? We said, let's get out. And now there are things that you can do that are more advanced, right? If you get this crossover happening at an SR level, you could, if it's powerful, but again, don't use the crossovers as a depiction of that's the direction it's going to be going for a long time. You will get bars that go against you with that process. All right, so keep that in mind. All right, so I hope it makes sense to you for that process. That alone of being able to do that one process, being able to get in and out of a trade, that if it's going against you, if it's going against you. A lot of people ask us, when should I get out? If you apply all your charts with that, just that one thing, getting into any of the signals, if you're into a signal and it's in the wrong direction for you and it's crossed over in the wrong direction, you might want to look at getting out at that point, saving yourself from not even getting into that point. If you get there and it's crossed over in the opposite direction, maybe the signal was tricked during news, maybe it was whatever it was. But your real power here is knowing your system in front of you. You've based this back on real simplistic processes, right? We're not dealing with that shouldn't take a lot of brain capacity, right? I hope, if anybody, go take another toke or what have you. But for me, I was able to process that information very quickly and see that pattern for me is that when the signals were losing tremendously for me for the SR Max, why were they losing at certain positions and they weren't on others? The one common factor, because of the data, remember that, I wasn't able just to see this by my eye. I had to look at the data, and every event that had a crossover moments prior to that 45 minutes to an hour later lost in that trade. And those that had a crossover in the opposite direct, or the ones that crossed with the direction, definitely won by larger margins at that point. Okay, so keep that in mind. I hope you guys enjoy that. I mean, because that to me is like the huge capability of knowing now your trade, right? And until I get that on, you can easily put that MACD on there. Well, Sean, yeah, basically, if you get into a trade, Sean says, if you get into a trade, you'll have to check the MACD every 15 minutes. I hope there's no, I know it's a loss in translation here, but I hope there's no negative connotation behind that, because the availability to check the trades, if you're trading, to sit in front of your computer for every 15 minutes, come back there every 15 minutes to check your trade or scan something and look to see, is something that's so stupidly simple to be able to handle, and how much money can it save you? If you have 10 contracts on a $25 trade, is it worth to you for that process to be a version of a constant confirmation of the process, right? It's absolutely, yeah, oh no, you absolutely understand it. And I appreciate that. But there is, I always have to kind of guess because I don't really know you well enough yet, Sean. So I'm still trying to get some of the verbiage and stuff that you say. So usually that comes with when I talk to you in a consult or what have you. So just, don't take anything personal. But the process is really about how much work are you willing to sit and do to make that living happen. Now, sometimes, right? Sometimes you get this opportunity that if back when you're checking a 2-hour trade every 15 minutes, how much work are you really doing in that process? You're not really, I don't want you to sit and scope after a job, sit there for 12 hours and do something, but there is definitely an opportunity for you to be able to save your ass and make a lot more money that way. Ben says price, entry is key. Absolutely. Will this indicator have a notification to exit, or is there something we have to watch manually for? Sorry, I had to step away from help me out. No, absolutely. No, the indicator itself, I just gave you you'll probably have to watch the replay here because I'm not going to go through it all again. But we put on the MACD process there on the screen, and that itself has a very powerful process for an exit indicator. The indication on how to get in, we're still dealing with the indicator rules here for that process, because you have to be able to avoid news under that solution. But there is a lot of work that still needs to be done to generate the signal and get all that stuff on. So, and listen, the MACD process for that exit rate can work for the other signals that we have, right? So you have to keep that in mind, but you don't want to, like I'm giving you a word of warning now. Don't get lost in a MACD crossover method. Okay, there are a lot of strategies out there. You can try to find your own way into that if it helps you with your tools, but allow the system to do its thing, to call a signal direction. Sometimes it's right, okay, of course, and sometimes it's wrong. Knowing when that is more on one side or the other will dictate your success rate, of course, all right? But you want to sort of tip the scales in your favor, knowing prior to, because when that USD JPY hit like that, right? and we were able to see that, it was right here. It wasn't all the way up here after it lost, right? We didn't learn that, oh, looks like it failed. You know, we didn't know that this support and resistance, we could have looked at the support and resistance line and said, okay, yeah, that should be good. It should bounce off of that, right? No, because it failed, right? Because it failed right here. And that's the messed up part about it, is that as we got into the trade, everything was heading down and then it started to reverse. It gave you an indication that it was failing right here, right? Right at the end here. And we were able to do something about it. Where in most cases, most signal networks will just give you a price and tell you to go do whatever, right? So there won't be a ding, get in the other direction just yet. There might be in some of the stuff that we're doing. Let me know. I'll let you know right now that the DEX SR Max is partially automated and partially manual, right? So here's how it works. The system's going to kick out a signal, right? So the bot is going to go take this particular signal, and in between you and the machine is me, basically, right? And what's going to happen is it's going to come to me in a ding, and I'm going to look at it and go, should I take it or shouldn't I, right? And if I should take it, I'm going to click this button and it's going to go here, and the information is going to be there, okay? So it's going to come to us. We're going to verify it. I'm going to look at the chart real quick. Yes, there'll be like 10, 15 seconds, maybe sometimes even a minute difference, but it's a 2-hour trade, okay? So that process of boom to us and then to you is not very long, right? So that's what it's going to happen. When it has a reverse, there might be the same process that's going to come over. Do I want to sit and reverse that around and say, okay, there may be a reverse, you guys go have a look, you test to see if it's something that you want to do at that point. Okay. But in between this time period, there's you too. You can sit and go, should I reverse this signal, or should I reverse this process or get out? Should I scalp it out now? Because listen, this one, that USDJPY, this could have looked very tempting to stay away from this after it rejected here. You can say, let me see what it'll do. Let's see if this will reject. And then you end up staying in, and you get down to here, and then it gets back up to here, and it's way too late. You're already, 6 or 7 pips, and it's failing. It's probably in minus 45, $50 now. And now you're just hoping, you're just flipping a coin here, right? Because it's going to fail in this last 15 minutes, right? And there's no information here that's going to tell you that. There's no other indicator you can grab to say it's going to fail this SR level, okay? The only thing that's telling you is that it's going against the signal that the system put out here, way back here. 1, 2, 3, 4, 5, 6, 7 bars later, right? So you're only in for like a handful of bars and it fails. And then boom, it tells you, okay? Now, again, this doesn't happen everywhere. Look at this nonsense that's down here for the Euro JPY. There's no direct crossover process and saying, oh, should I get out, should I get out, should I get out, until here, right? If you were in a sell, you see? So if our system put out an indication, say if you were in for a sell, this may be something that you might want to get out on, but then look what happens. Sort of just margins off and still keeps going, right? So again, and again, this is all speculation. We're not saying that we were in one here at that point. The only information I have for our system kicking off the trade and saying, here's what it is back here, okay? So I don't have it for everything else yet. But I know from previous trades that I've looked at and where stuff has gone wrong, we have said, that this is what it is. Our system did kick in the USDJPY, which one I didn't take this morning, by the way, which was right here at this area. It called out for it was calling out for a sell, I think, back in this area. Had a crossover in, it was still on a sell. Never came back up enough to touch the SR level, and then later on kicked out another signal for the sell here, which I didn't put out. And it was just because of time factors, and I didn't have time to get in those trades. I was doing other things. I was building. All right. Yeah, so the MACD will be a default that's on the system on that process on Dex Trader. Also on Dex Signals, it'll be there as well. You can use that crossover if you're in an intraday at the same thing, but those intradays aren't in the same reasons as our SR maxes. Okay, so keep that in mind that sometimes you might be looking at that, and that could be your gauge as well. Is that MACD heading in the direction is the same as the intraday signal? If it is, then yes, you can use that. You can use that process. You can use that crossover in the opposite direction of your trade at that point. All right, let me move on. Final thoughts. And I usually do this because I have a process that I'm thinking about when I'm making these slides, and I put in the things that I really want to talk about. And where I was putting this down for your time is now, is some of you try to find, what's the best time for me to be able to make something happen. And I had to try to have a conversation with somebody yesterday that was very difficult, as whereas they tried to pull the law of attraction for me. I know that I want to make this work, and if I think it will happen. Well, guess what, folks? No, it won't. I'm sorry. I used to teach the law of attraction. The law of attraction doesn't work that way. The law of attraction is the gas that is in your car. Okay? You can have a fancy looking car. You can have all the wants and wishes of direction as possible. But unless you put the gas in it and drive the freaking thing, you're not going to go anywhere. The best thing for you to do is to seize the time that's in front of you now to learn as much as possible about everything that we're talking about and apply, right? The knowledge of the direction, the pushing of the gas, the steering of the car, all of it needs to be done. Not just the idea of the direction. You just can't think, hey, I want my car to drive down the road and go to Wawa or 7-Eleven. You have to put the time in. And that comes from getting in and making mistakes, getting in and having success, getting in and making another mistake, or having it fail and know what the success rate is so you can make it work. Secondly, learn before you burn. I've heard so many people, and I state this now. When I say so many, if I see 3 or 4 people out of a group of people going, yeah, I'm live, I just started and I thought I'd just give it a shot. It's not that much money. It's only a couple $1,000s. I want to crawl to your house and knock on your door and take $1,000 from your wallet and see how that feels. Because let me tell you, why are you paying anybody for learning other than Dex and yourself? Okay? Save yourself the money. You don't care if you can afford it. Affording it makes no difference. Affording it means that you're making sloppy judgment calls, which tells me that you're not going to be a very good trader in the future. So I don't care if you got the money or you don't got the money. I don't care who you are. I don't care what level of status you are. I don't care how much money you got. Don't pay Nadex for your mistakes or your training. On the off chance that you could be doing it right, the first thing, no. Learn how to do it right by demoing, training, and working it to the bone. And then, and only then, will you start trading live. With the exception that if you are going to tweak your process, where do you go? Back to demo. Thank you very much. That's what you do. Because the moment you start succeeding the process, and thinking, all right, well, I'm going to give this a shot and let me see where I end up, you're going to fail. You're gambling. You might as well just head to the casino and put your money on black or red. Doesn't matter because it's 50-50. Okay? And I don't want to hear any screaming inside the chat room. Well, this system doesn't work for me. I came out and I tried 3 trades. Screw you. You better learn how to do about 1,000 trades, 2,000 trades before you start screaming. Because listen, no matter what program that you go to out there, there's nobody building you the offset chance that a bot and you're going to push a button and make $1 million tomorrow. You're going to become a millionaire by $1 at a time. And that's how it's going to work. With that said, keep faith, but one eye open. Because as you go through, everybody and their mother's going to come to you. Hey, how did this work? What did you do? You want to keep working the process, but you got to keep one eye open because even though that I say that pathway that you're going to take right now, I'm going to point you the direction. I'm going to point you down a path, and I'm going to say, there it is. It's open. It's clear. That's the direction. You're going to take it, but there's still a chance you're going to get mauled by a lion. Okay, and that's not by me. I'm not the lion, right? I'm just pointing you a path and saying that's the way to go. Something's going to happen, possibly. So keep your eyes open as you go. Okay, learn from your mistakes. Don't make bad habits, and make sure that you know that I have your best intention involved, right? That you have to be the person that makes the decisions every step that you take. Lastly, congratulations, people. We have changed this industry. And I know we have changed this industry because the people that come to us, on a constant basis to tell us that this is so amazing, what's happening, isn't even into the signals yet. Just the one, that we pick up a phone call when you call, that we have consults, that we have emails, that we have a chat room, that we have a support line, that we talk to them to help them figure things out, that we have a journal system, that we have all these things, the learning programs, the videos, the networking, the responsibility of all these people together working to make something better. Guess what? In the darkness of this shitty ass industry, and let me tell you folks, it is riddled with scum. People that just want to rip you off at every moment they can get their hands on your dollars. That's all they want. They don't care about anything else. Because I get hit up every single day from all these little scum buckets that are out there. Hey, can you send people to my network? Because we really want to make sure that we do the same thing you're doing, is making everybody really happy. Yeah, screw you. You're still out there peddling binary option stuff. Okay? That's not what we're here for. All right, we've changed this industry by one person at a time. Every single person we bring on, we care about your success as much as you do. Okay, so if you don't really put the time and effort in, how can you expect us to do the same thing for you? So make sure that all these things that I taught you about in the final thoughts today, that you apply at one point or another, but also know that everything that you have done to lead you here, and everything we have done, we have changed an industry. We have set the bar for the industry way up here, and trust me, they're all the way down here. And the distance between here and here, well, there's the earth. Okay, so when we set the bar high, we're talking high. All right, let's just be clear. For everybody that's watching this after the fact, I want to thank you for your time and getting through one of these videos. This is not the super long video, but still a pretty good long video. So please keep in mind that we're always here for you, and I want you to get out there and make it happen and trade well. Everybody else that's in the room, I'm going to try to do a very quick questions and answers because I have a consult to get to, and that's going to be my excuse. But I want to thank everybody. I'm going to end the recording now, and we'll see you in the next one. Trade well. I'm Max, and this is Dex.